So what's going on in businesses today? First, relative to 6 months ago, and I'll do this for all the various segments that we addressed tonight. They're reporting basically inflationary pressures, right? Significant increases in prices of labor and materials. They're reporting that overall unit sales actually are increasing along with net income. They see plentiful opportunities for growth. However, there is a little bit of a shortening of the cash cycle. Receivables periods are receivables periods are lengthening. General business conditions are declining, and business owners are stressing about the economy. They're spending more time thinking about the economy. As for the top issues facing privately held businesses, economic uncertainty emerges at the top of the list. Okay, and to no real surprise, unemployment is still at 9% and continues to be persistently high. GDP is relatively low, a little north of 2%. Record numbers of people on food stamps, and poverty index is at all-time highs. Second is access to capital. Okay, very important on the landscape for those issues considered by privately held companies. So what is the overall state of financing? Well, nearly 9 out of 10 businesses report having the enthusiasm to execute their growth strategies. However, less than half of that, just 49%, are reporting have the necessary financial resources, right, in order to successfully execute those growth strategies. So there's a very significant gap that exists here. We were able to ask business owners, right, what their current sources of financing are, and we segmented this in a number of ways. The graph that I'm reporting on here is that segmentation that exists for revenues of $5 million and north. So for those businesses, about half of them, right, report having a bank loan. About 4/10 of them are reporting that they have no external financing whatsoever. And then we start to look at the other categories that are largely represented by you folks here tonight. Asset-based lending at 9%, private equity at 5%, VC at 2%, mezzanine at 1.4%. When it comes to financing, we were able to gain some pretty good insights. And the major insight that we learned is that size is important. Size does matter when it comes to raising capital. And so we asked business owners if they attempted to raise capital over the prior 12 months, and as it occurred, about a third of them indicated that they had attempted to raise capital. And then we asked, what type of capital did you try to raise? And were you successful or not? And how many attempts did you initiate? And so for those businesses of less than $5 million in revenue, the average of all the categories, the average success rate is about 51%. For the $5 to $25 million revenue range, that success rate jumps to about 64%. And then as we jump above $25 million in annual revenue size, that number increases to about 83%. So the larger the business, the more accessible capital is for those. For those of you who operate in that space, obviously this makes a lot of sense to you. And it's pretty robust among the various types. For instance, banks, on the lower end, 44% acceptance rate jumps to 72%, and then to 90% for the largest. Private equity, 23 to 44 to almost 3/4 to 74%. Also, we were able to chunk the data out a little bit, and one of the things we also learned is that location matters. Okay, we were able to separate Southern California from Northern California. And across all major categories, bank lending, venture capital, asset-based lending, private equity, mezzanine, there was basically a higher success rate for those businesses that are considered to be part of the Northern California region versus Southern California. Well, what does this mean? Well, when it comes to some of the reasons that businesses are citing for their lack of hiring, one of the items that emerges and happens to be second on a list is access to capital. And that number is higher for Southern California businesses at 45% versus Northern California at 39%. So it appears as though this relative lack of capital relative to up north, right, is having some pressure on businesses and their ability to actually hire. So what do the next 12 months look like here for privately held businesses? They're reporting a lot of the same of what they've experienced over the prior 6 months. Increases in sales, increases in income. Expect their receivables periods to continue to lengthen. No improvement in general business conditions, and further increase in time worrying about the economy. Okay, so the outlook isn't all that favorable from the business owners' perspectives, but somehow they remain optimistic about future growth opportunities. Now let's take a look at some of the capital providers.